My name is Osbert Tang, an independent insight provider based in Shanghai. My specialization is in the China and Hong Kong market, both in equity as well as credit. If you look at the size of the market, last year it has roughly about 96 trillion in terms of the total outstanding notional value and in terms of the RMB. So it is actually the second largest bond market in the world, right behind the US. And the other thing is that if you look at the foreign investor, their ownership is actually very tiny in the overall onshore bond market in China. In terms of foreign ownership, it's only around 2.3% of the China notional bond actually owned by foreign investors, so still have a lot of room to grow. And lastly, I think more interesting thing is that you have a very significant yield differential between the Chinese bond as well as US and also Euro and also Japanese bond. All these make it very, very attractive for foreign investors. Well, I think the key trends probably we're looking at, especially in terms of the new product or new type of bonds being introduced into the Chinese market. For example, green bond is one area we see rapid growth. Green bond globally only account for roughly about 1% of the total fixed income instruments. But what we see is that China is getting a more important issue of green bond. Last year, China is actually the second in terms of the green bond issuance in the world. So this is one area that we see a major trend actually going to be involved in China. And the other thing is that we see historically the bond in China has been having a relatively low default rate. I think it's around below 1% back in 2014-15. And now it is steadily increasing to, I think last year probably around 1.5%. So this trend is something that we are going to see in the next couple of years to continue. I think partly this is because the slowdown in terms of the overall Chinese economy and also quite a lot of default actually happened in the private enterprise companies. So in that case, because they have more difficulty in securing financing as well as refinancing, so actually we do see that potentially the default rate for private enterprises will go up. So that is something that I think foreign investors will need to keep in mind when they invest in the onshore bond market. And lastly, we want to highlight that going forward, because of the slowdown of the Chinese economy, the Chinese government will continue to use the fixed asset investment, particularly in the area of infrastructure, to support the growth of the domestic economy. So this will be very much financing by bonds issuance. So this is one developing trend that actually will continue to increase in terms of the scale of China's overall onshore bond market. The first one, I think, is because of the limited liquidity in the secondary market. So that would be something that foreign investors need to keep in mind because they may not be easily able to sell their holdings if they want to exit the market. So that is one thing. The other thing is that in terms of the rating preferences or rating reference, in fact, the domestic rating agency is actually using a different type of methodology or scale when compared with the international rating agencies. So in that case, we will see that some bonds, maybe the same issuer, are rated highly in the domestic market, but in the overseas market, that is completely a different thing, much lower in terms of the rating. So foreign investors will have that kind of problem, for example, interpreting the two different types of the rating outcome. The third thing is that the overall disclosure, transparency, as well as accounting standard in China is still relatively different from the overseas market. So this is something that the foreign investor need to keep in mind. Just to give you one example, is that the accounting standards are very much different. China accounting standard as well as the international accounting standard. And the other thing is that also the disclosure, Chinese English disclosure, and also the detailed to what extent the financial statements are disclosed. And the next thing we want to highlight is that there's still very much a lack of the overall hedging instrument in the market, which I think this one is one of the issues because you will be exposing in terms of the risk because you don't have a very efficient way or instruments to overall hedging your exposure to the onshore bond market. So I think these are the key challenges that the foreign investor will need to face when they invest into the onshore market. And I think the situation will improve, but I think it will still take time to make it really in line with the international practice.